In this video, we're going to look at some developments that you must be aware of because they will directly impact your financial future. For the Foundation members inside the CTKS Method service, it's very important to look through the charts again and look through each of those videos, each of the 25 videos. Make sure that you have the indicators overlaid on the right charts. We're going to look through smart money buy and sell levels on a wide range of charts to help you to escape from the retail mindset that desynchronizes people. Worse yet, the retail mindset costs you an enormous amount in terms of stress but also losses. We'll also look more deeply into the concept of synchronization. When you are synchronized, you are paid by the market, not by other people, by the market. When you're desynchronized, you pay the market, not other people, you pay the market. Stay tuned, it's going to be a great video. Hi everyone, I'm Ken from Crypto Trading KS and the inventor of the CTKS Method, the world's most powerful smart money buy and sell level detection system. If you're new, a very warm welcome and welcome back CTKS family. If you would like to know where smart money is buying and selling, please subscribe. And don't forget to smash that like button just as hard as you can. Let's run the numbers. Happy Father's Day to those people celebrating Father's Day around the world. These days are really special. It's an opportunity for kids to say how grateful they are today to their dad, and on Mother's Day to their mum. A lot of people have recently been talking about the decorrelation between Bitcoin and the stock market. One thing to bear in mind, exogenous events always cause these decorrelation events. And what's decorrelating crypto from the main market? Well, it's Gary Gensler and the SEC's enforcement actions on Binance and Coinbase. For those inside the main markets, and you'll find a lot of people in the main markets are in crypto and vice versa, we can see economic confidence is on the rise. When we look at junk bonds, risk-on behavior is coming back into the market and fear is leaving the market as well. The fastest way to tell the difference between retail and professional. Retail only looks at the chart that they put money into. Professionals look at that, but first everything else, and especially the Tier 1 and Tier 2 charts. Tier 1 charts are the engine of the global financial system. They are vitally important to understand. The DXY is a very, very important thing for you to track. That's the US dollar currency index. And what do? Through the CTKS method, we identify where smart money is buying and selling. And what do we notice about smart money at the moment? The DXY recently came down on the 15th and found support. That support has held the DXY. Now the DXY is seeking to go up. The DXY is currently 102.281. There's a smart money buy area at 102.207 and one at 102.177. There's a lower one which is more powerful at 102.060. From the sell side, the upside, 102.595. Don't forget that these smart money buy and sell levels are algorithmic levels. The DXY has been marked up since 1967. This is not recent indicative price which will RIP your money. The US 10-year yield is a very important thing for you to keep your eye on. A lot of people say, but Ken, I'm no interest in the US 10-year yield or the 2-year yield or the DXY because I just focus on Tesla or Nvidia or Microsoft or could be something else in crypto, Bitcoin. Yields make a huge difference to how the economic system is moving. Let's have a look. What did the US 10-year yield close out at? 3.769. And what do we see here? A lot of overhead resistance at that 3.806 and a little bit lower at the 3.790 mark. Yields came up, spiked. Smart money pushed it down. But is it starting to turn around? And if yields start to turn around, how would that impact your stocks? How would that impact your cryptos? How would that impact your Forex trades? Please let me know in the comments. This is all part of active learning. The market pays you for synchronization. The US 10-year and the US 2-year are both vitally important to track on a daily basis. Professionals track these. Professionals know that these are very, very important charts to keep your eyes on. What do we see with the US 2-year yield? We can see that the US 2-year yield closed out at 4.718, and all of this overhead resistance. We can see that the US 2-year yield has been having a lot of trouble. That's some fairly steep resistance at that 4.733, and up a little further at that 4.738. What does this actually mean? Price is always rebounding from SLs to SLs. What is an SL? It's a Stanfield level. What's a Stanfield level? That's these lines. These lines are your true algorithmic and institutional support and resistance lines inside market structure. If the US 2-year yield and the 10-year yield start to kick up, we would expect the DXY and the VIX to kick up as well. What will all of that do to your beloved stocks, cryptos, and Forex? These are the kind of questions that you need to be able to answer. There is a possibility that the US 10-year yield, the US 2-year yield, and the DXY could be coming up. Why is that? Because the US Treasury cash balance fell to very, very dangerously low levels. And what have we seen when the cash balance has done this previously? The US 10-year, the US 2-year, the DXY have rallied. That's something to just bear in mind. Many people think that the markets are a zero-sum game. They are not, and they never have been. This is a retail myth. Having been in financial markets for nearly 4 decades, I can tell you flat that the market pays you when you are synchronized, and you pay the market when you are desynchronized. That's as good as it gets. You are not in competition with other people. When you lose, other people aren't necessarily winning, and when you win, other people aren't necessarily losing. We'll talk a bit more about that as we go through today's episode, but the concept is you must do everything possible to raise your synchronization. This is exactly what professionals do. Professionals focus on raising synchronization. When it comes to investing and trading, there are always opportunities inside global financial markets. The key is just finding them. To find opportunities, we must first know what the levels are. And Perperatum said, "I win or learn and never blame." That is a fantastic statement to live by. If you don't blame, you're by definition owning it. And if you own it, you can do something about it. If somebody else owns it, you're at that person's mercy. If you own it, wow, you can do something with your life. Bitcoin is currently 26,402. We can see a smart money buy area around that 25,922 and a smart money sell area around the $27,000 mark. Since BlackRock came in and said, "Ooh, we need an iShares Bitcoin trust," the crypto market has responded very well to that. Before Gary Gensler came in and said, Binance and Coinbase, I'm going to sue you. Gary, I'm going to sue you, Gensler, acts again. BlackRock, the world's largest asset manager, chose Coinbase custody as their custody trustee. So just keep this in mind. Perperatum said, "To all the viewers who find these videos informative and think Ken's way of sharing his knowledge is valuable, be nice and press the like button." Wow, what a fantastic concept. Yeah, we would love you to press the like button. And thank you, Perperatum, for your kind words. Currently, when we look into the shorts and the longs inside Bitcoin, there were a lot of short liquidations recently that caused that upward momentum in price. The shorts are gaining a bit of traction at the moment, but the longs aren't really letting the shorts have their way at the present time. It's a little bit undecided as to which way it could go. Of course, what we see at the moment are the longs getting liquidated. These big long candles down are long liquidations. The big long candles up are short liquidations. Let's check out what the liquidations are actually doing. As it's the weekend, we expect light trading volume, and we're seeing that about $33 million worth across 16,905 positions. And when we look to total liquidations across all exchanges in the past 24 hours, 71% long. What about the past 12 hours? 76% long. Past 4 hours, ay caramba, she's coming up, 96% long, and the past hour, 92% long. This is a bit of a difference to the past couple of days when the predominant weighting were the short liquidations. Now we're getting more longs, but it's really light trading volume. One thing that we know, no alt can escape Bitcoin's gravity. If Bitcoin is coming down, what's happening to the alts? There's a 99% probability they're coming down with it. Can we prove this out? Yes, we can. Look at Ethereum versus Bitcoin. It's coming down just a little bit stronger in a negative direction, but it's still coming down. What about BNB? It's a lot weaker. This downplay in Bitcoin's gravity has adversely affected BNB. What about XRP? The down in Bitcoin has brought XRP down as well. What about ADA? ADA coming down? Yes, because Bitcoin came down. And you can see that over-exaggeration. What about Doge? Yes, it came down as well. What about Tron? Yes, Tron can't escape either. It came down. Solana came down as well. One thing that you need to be aware of, please watch Bitcoin's levels. They're critical for your understanding. The CTKS method is the world's most powerful smart money buy and sell level detection system. When you look at Doge, you may be tempted to use recent indicative price to mark up your charts. Unfortunately, recent indicative price will RIP your money. It's the way that retail traders get caught on the wrong side of the trade and the wrong side of the percentage. Instead, with the CTKS method, we mark up all of price history from 2013. Let's throw on the indicator. What we can see is Doge is currently 61.80. There's support underneath at 61.15, a little bit minor at 61.38. There's more support down at the 59.87. We can see that Doge has not been successful in taking out sustainably this 63.14 and the 63.55 level. Unfortunately, didn't get up to the 64.01 level either. This overhead resistance, this clustering of SLs or Stanfield levels, makes price it's very difficult for Doge's price to break through that. Inside the CTKS method service, you get the indicator with all the levels up and down for the next month. A lot of people stay away from trading because they think that by winning other people are losing. This is not the case. I'd like you to think about it slightly differently. If you're selling something personal, say you sell your car to another person, when the other person buys your car, are they losing because you gained? The truth is, you both win. You got some money and the other person got your wonderful car. What about if you were to sell some of your clothing to another person? Does that person lose because they just paid you? What about if you sold some books and get some money from that? Do those people lose because they now have that knowledge and you now have money? Or what about if you're selling your old phone? What about if you sold some jewelry? You can see that both people gain from such a transaction. If both people gain, if they don't gain, they wouldn't make the transaction in the first place. Those are all examples of zero-sum games. Rajat said, I used to believe that the market was a zero-sum game, which resulted in a fear of losses and a guilt of profits. Now that I have learnt the market rewards synchronization, I feel courageous in case of a loss and grateful for a game. What a game changer. Thank you, Ken and Kate. Smashing the like button for every video is the least we can do. Oh, Rajat, thank you, my friend. You can see that it's not a zero-sum game when it comes to just normal things when there's only two parties. What actually occurs inside financial markets is that you will go through a broker. Orders will get aggregated. There's not just another person on the other side of the trade. There are millions of them. And just like selling a car, selling clothing, selling your old mobile phone, selling jewelry, selling anything that you want, both parties are gaining, or they wouldn't do it in the first place. But you may say, Ken, what happens when the trade goes against me and I'm at 1,000-to-1 leverage and I get liquidated and I lose my account? Well, that's the thing. Please don't use leverage. There's nothing per se wrong with leverage if you know what you're doing, but so few people know what they're doing. Using leverage without knowledge is just gambling. And what does gambling do? The house always... Please let me know the end of that sentence in the comments. Well done, John. John picked up what I've been saying for a little while. Another great quote today. Do not guess. I despise guessing. My nature is as a scientist, I want to know what's going on. As a mathematician, I don't guess because guessing is really problematic. How do we not guess? I invented the CTKS method so that to help you not to guess inside financial markets. When we look at Solana's price structure, we can see Solana is currently 1544. We can see that there's support at 1535 and a little bit lower at that 1532. There's overhead resistance right up here at 1614. We don't want to guess. We don't want to be subjective as to where these resistance and support levels actually are. Support and resistance are very, very important to know. A lot of people, especially just when they get into learning, they think that all support and resistance levels are the same. You can see the different weights of these SLs. They're not the same. They are different. That means that different levels have different strengths. You will find price just rebounds from SL to SL. If it's got enough positive momentum, it's going up to the next one. If it doesn't have sufficient, it's coming back to the previous one. Just keep this in mind. It's a very, very powerful rule. And we can see with Solana, it nearly got up there, but it just missed it by 1 cent. If you don't know where smart money is buying and selling, you are just guessing. Guessing is akin to gambling. You will become desynchronized. When we look at ADA, where is the smart money buying and selling throughout this market structure, marked up since the start of price history from 2017? Are we at a level of support, a level of resistance in ADA's price structure? And understanding the price structure is incredibly important. If you don't understand the price structure of what you're trading and investing in, you're in a lot of trouble because you don't know where the real support and real resistances are. Let's turn on the indicator, and what we can see, ADA's price currently is 26.20. It's just little bit above a smart money buy area at 26.10 and a little bit below the 26.40 smart money sell area. The thing to bear in mind, when price is coming down, we expect these Stanfield levels to capture price and to reverse it. If we've got a lot of negative momentum because there's some kind of panic inside the market, as we saw recently with the SEC's actions, we can expect multiple support levels, multiple algorithmic buy levels to be bypassed. But when they get stronger and there's more of them, price will find that level and reverse from it. If you would like to join the 5% of people who know and leave the 95% of people who guess behind, you can simply learn the CTKS method, which is a standards-based process to reveal smart money buy and sell levels from any price chart. You learn it once and apply it for a lifetime. I've always been amazed at how much time and effort and energy people put in to actually planning their holidays, but when it comes to throwing 10,000, 20,000, especially under leverage, into financial markets, people have absolutely no problem. They just say, I hope it works. What we need to do as professionals is move past hoping and praying. That's not the way professionals work. Professionals know the probabilities. They mark up their charts with the CTKS method. And you can see it takes a lot to mark up your charts. It's not a simple thing to do. But then, making money is not a simple thing to do either. A lot of people think that in financial markets, making money should be so easy. Well, that's just simply another retail myth. Success in any endeavor requires persistence and commitment. We need to learn, which means we need patience and humility. If we already say we know everything, we're closing down to our learning. That means the market will desynchronize us, and that is a very costly thing to do. Where retail is notorious for gambling and wanting luck and using high leverage, professionals are notorious for learning. Attention to detail and knowing how all of these levels move in all of the charts is incredibly important. And inside the method service, you get a video explanation, three-dimensional risk management, which explains the up, down, and neutral paths for each one of these. Each one has its own video and also its own indicator. Crypto Badger said from yesterday's comments, I love how you set up the crosshair, and you might notice the crosshair has 3 different colors representing the 3 different tiers of charts. Crypto Badger said, I don't like trading anything without the CTKS method. The information is too valuable. Without it, I cannot know where the clusters of support and resistance and fresh air gaps are in the chart. And a big happy Father's Day to everyone. Thanks so much, my friend. One thing to understand, inside the service, every single time period is audited over every single candle. Very specific methodologies are used to give you the most accurate levels humanly possible. Great time, attention to detail, and care is embedded in every single indicator that you see. Let's have a look at what the S&P 500 is doing. And this is exactly what Crypto Badger is saying. If you don't know where the confluence of resistance levels are, you could think that things are going up and up and up forever, or down and down and down forever. The truth is they're bounding between SLs, Stanfield levels. When we get up to an SL, when we overcome it, we're heading to the next one. If we manage to consistently get above one, we're heading to the next one. If not, we're heading to the one below. This plays out all the time inside financial markets. It can give you so much certainty. Stronger levels create stronger gravity, and to understand where those levels are, we need the indicator, which is the output of the CTKS method service. And thank you, TSP, smashing that like button. Wow, you're awesome, my friend. And when we pop on the indicator for silver, which was started trading in 1802, what do we see? We can see silver's price at 24.11. Now, what is happening here? You may notice this particular smart money support area at 23.97 is very, very important. When price sells down, these smart money levels capture price and rebound it. The large ones have more gravity. That's exactly what you want to look for inside your charts. And we can see that underneath silver at that 24.10 level is another light support. but this one down further at around that 23.97, that's the one we want to keep our eye on. We always use three-dimensional risk management. We know the price is always moving in a wave. It can go up, it can go down, and come back up within the span of 24 hours. That's why it makes it vital to know where the smart money buy and sell levels actually are, where they're clustered, how strong they are. And you can learn all this for yourself through learning the CTKS method. Gold has been trading since 1833, and all of those levels have been marked up with the CTKS method. And thank you, Brett, and a very big happy birthday to your son. And if anybody is celebrating a birthday today, or just recently, or just in the future, happy birthday to you. Let's have a look where gold's smart money buy and sell levels are. We can see gold, currently trading at 1957 and 86 cents, is above that 1954.50 smart money buy area. It's also below this smart money sell area at 1961.34. Just bear these two in mind. If we drop below that 1954, we're headed down to 1939. But if we can get above that 1961, we're headed to 1972. Please let me know in the comments if the US Treasury cash balance does its thing and increases, and the US 10-year, the US 2-year, the DXY, and the VIX follow a similar path to what they've done in the past. What could that do to the markets? Please let me know in the comments. This is a really important question for you to keep your focus on. We must always stay opportunity-minded inside financial markets. Financial markets are just fear-based. The key is to keep on learning. When you get a setback, when things don't go your way, just know that you've got a learning experience. Just salute it, move on. And when you salute it, you say, thanks for the lesson, I'll pay attention. Because if you don't, you're going to get that lesson back at a harsher level. And you don't want that. Nobody wants harsher lessons. In financial markets, it means greater losses, and those losses are already hard. If it's a little bit of money, if it's a lot of money, it's even worse. So just please keep that in mind. Always remember that these life pullbacks lead to life rallies. If you're going through a life pullback at the moment, please know that our love and healing thoughts are with you as a global family, more than 16,000 eagles strong. It's easy to become smaller in life, especially when we get hurt by things. But your destiny, your purpose is to spread kindness, empathy, and care. Is to contribute more and to share more. When we're hurting, this is the last thing that we would ever consider doing. But the truth is, life is counterintuitive by nature. Success in life and fulfillment in life often require us to do the exact opposite things than what we think we should be doing. But if it's done with integrity and kindness and no negative excellence, you're on the right path already. It's very important that you keep your eye on the DXY, also the 10-year yield, and the 2-year at the current time. I would also urge you to go back and to have a look at the videos inside the service on those particular charts. And if you're not looking through every single video, there's 25 videos in the service at the moment and 25 indicators. The best thing that you can do is look at each and every video. There are always opportunities inside every single financial market, and in tomorrow's episode we're going to look at Forex. The CTKS Creed is a way to stay positive and just shake off the fear-based things that are thrown at you from financial markets. Knowing the universe wants you to succeed and being able to show kindness, integrity, and gratitude each and every day. Knowing that opportunities in life reset daily. That these life pullbacks that we all go through give you the strength for the next life rally. Being dedicated and committed is so important, and you either win or learn, and there's never a need to blame. Blame is so disempowering. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.